We're very excited about Styldrift 2. Styldrift 2 is, you will recall that we are working on Styldrift 1 at the moment, and that is our project that would more than double our production from 280 to 290,000 ounces, 4E ounces, and Styldrift 1 will take it to 610,000 ounces by 2017. Now the Styldrift 2 area is down dip of the Styldrift 1 project. We're very excited about it. It represents a substantial component of the resources of our total business. And what we have embarked upon is to prove up those resources, to convert them more from inferred resources to indicated resources, to the indicated category. We've commenced with a mining program of about 52 kilometers for this year. We've done 26 kilometers thus far, and that will help us to upgrade the resource, to put us in a position to start with the various studies that are required to mine that area. In other words, proceed to concept study, pre-feasibility, feasibility, and ultimately approving the project. So this is a bit of a longer-term project, or a longer-term horizon that we are looking at. You know, Styldrift 1 takes 7 years to build before you in steady-state production, and that will probably be something similar for Styldrift 2. And we would only be in a position to really put specific numbers on the table once we've gotten through all of these studies. But we wanted to raise the flag to say, look, there is this really, high value property down the line that we would, and we're working now to upgrade the value of that. But there's some time to, some water under the bridge required still. We're probably looking at about from today, you're probably looking at about a 12-year type of period before, Styldrift 2 will really be a factor in our business going forward. But it will probably be of a similar size to Styldrift 1. Our business has been marred in the mining industry in general. We've had significant safety stoppages during the first part of, especially the first quarter of the year, which impacted on our business. As you know, mining is a volumes business. It's very important to keep volumes consistent as you operate, and so that has impacted on our business to a certain extent. From a headline earnings point of view, our headline earnings was R1.05 per share. That compares to a R1.32 per share for the comparative period during 2010. The main reason for the difference is in fact that the weighted average number of shares that were in issue in the 2010 year was 137 million shares, whereas we have now, after our listing, 163 million shares in issue. And if you take that effect out, essentially you're comparing R1.10 for the first 6 months last year to R1.05 for the 6 months of this year. So there's a 5% deterioration in headline earnings per share. And the main reason for that is essentially additional costs that we had to spend in achieving our production levels or maintaining our production levels at the same levels that they were for 2010. So, revenues, essentially our production was flat. We had 3% increase in revenues as a result of higher metal prices, netted off by a stronger rand, and that was a 3% increase in revenue, but our headline earnings per share effectively dropped by 5% because we had to spend more direct costs in still achieving the mining the mining rate that we wanted to achieve. We intend to keep our production flat compared to 2010 for the 2011 year. The one thing that's proved very valuable for us is, you will recall that part of our strategy is that we would focus on mining Merensky, but we started the co-extraction of UG2 to provide us with flexibility in our business. That's when we took over in January 2010. And certainly for this 6-month period, that has proven to be the right decision, because the drop of 11% in our Merensky was fully made up by the additional UG2 ounces that we could mine, and that certainly has helped us to maintain our production at the level that we wanted to maintain it.